Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of January 6, 2014. Yes, it is 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week, Maryland mortgage rates ended the week about where they started. If you look at the bond chart on the screen, you can see mortgage bonds traded in a tight range. They have the black line there at the bottom, which was support. It did not break below that. And then the black line at the top was resistance, and it could not break above that. So a tight trading range all week. The long-term trend, though, is still for mortgage bonds to sell off, which means long-term interest rates are going to move higher. But short-term, we're trying to look for a breakout higher to see if we can get interest rates to move slightly lower in the short term. So our recommendation is going to be float your Maryland mortgage rate to start the week to see if we can break out higher from this sideways trend. If we break lower, quickly switch to a locking stance because they could sell off very quickly and rates could move higher and continue that long-term trend of the bond selling off. Now, what are mortgage interest rates going to look like for 2014 for Maryland? Well, that's a great question. We are looking for the long-term trend to continue, bond selling off, interest rates moving higher as we go into the new year. So that means that you should, if you're looking at buying a home in Maryland this year, the sooner the better. Get a sense of urgency because mortgage rates are going to move higher. We're looking for them to be in the 5% in 2014. So do yourself a favor. You can still get a rate that starts with a 4 if you get under contract now. Now, two reasons why we said it's best to buy now. Two reasons mortgage rates are going up. We got an improving economy. So as the economy improves, money comes out of the bond market into the stock market. So as the bonds sell off, the price of buying drops, the yield, which is the interest rates, go up. So that's one reason why interest rates are heading up. The second reason is mortgage bonds have been artificially high because the Federal Reserve has been purchasing mortgage-backed securities and treasuries. $85 billion a month they've been doing of their QE3 asset purchase program, and now they're tapering. January, they're only buying $75 billion. They've dropped it by $10 billion, and their goal is to stop it totally by December 2014. So they're going to incrementally lower what they're buying. So that's less demand on mortgage bonds. That's going to make them sell off, and the interest rate, the yield, go higher. So two reasons that interest rates are going to move higher in 2014. Improving economy, pulling money out of the bond market, and Federal Reserve stopping their asset purchase program and tapering it down. So that means get out there, buy a home. The longer you wait in 2014 to buy a home, the more it's going to cost you because as interest rates move up, your buying power goes down. Same house, mortgage rate is higher, you have a higher mortgage payment. But you're not going to have the same price on that house. As the year goes on, home prices are going to go up. So the same house is going to cost you more, you'll have a higher rate, higher mortgage payment. So you get a double whammy. So get a sense of urgency, get out there, get under contract, get a mortgage now, and we'll get you in right away, get your application, get your rate locked. Okay, now, if we dig into the economic news, the consumer confidence reading for December 2013 came out last week, and that came out higher at 78.1. That was from the lows of October and November. The consumer confidence dropped in October and November with the government shutdown. It looks like we're through that now. Consumers are feeling better about the economy with the reading of 78.1. And then Thursday, we saw the release of weekly initial jobless claims. Came out slightly lower at 339,000 claims. Last week's claims was 341,000. It was revised higher from 338. So we're stuck in this middle 300,000 for initial jobless claims. We need that to drop below 300,000 and get the labor market back on track. And we're going to look, we have a big report coming out on Friday, the December 2013 jobs report's coming out. They're expecting 197,000 jobs created. If we hit that number, it comes out better. It's going to be bad news for mortgage bonds. They're going to sell off because that means the economy is improving, going to give the feds more reason to taper quickly. So, but if it misses, we could see mortgage bonds benefit and we could see rates tick lower. So we're going to definitely watch that report coming out on Friday. And then in the housing news, we have the Case-Shiller Home Price Index for October 2013 came out and showed a 13.6% increase year over year in home prices from October 2012. That's a great number, but it's a little dated because it is from October. Since then, the housing market has slowed somewhat with rising interest rates. Housing market's still doing good, and the predictions in the report is for a 6% appreciation for 2014. That's still a good number. That's about the historical average. So that means home prices are going up again. They went up in 12, went up in 13, going up again in 14. So get out there and buy a house now. Now, in the local news, the next free first-time homebuyer seminar is in Towson, Maryland, at the Sheraton Baltimore North Hotel on Delaney Road. That's from 10 a.m. to noon. You can register for that event by giving us a call in the office at 410-412-3319, or you can register online www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.